Short exercise 3-9. We're going to adjust unearned revenue. So Southern Magazine collects cash from customers in advance and then mails the magazines to subscribers over a 1-year period. Record the journal entry to record the original receipt of $150,000 of cash. And then we're going to record the adjusting entry once we have earned some of that subscription. In other words, we've sent out some of the magazines. So requirement 1, we're going to record the journal entry to record the original receipt of $150,000 of cash. As usual, debits are recorded before credits. So let's start with cash. We're receiving cash, and that means cash is going up. And cash is an asset, so if cash is going up, that is the debit account. So cash will be debited $150,000. So what is the $150,000 credit going to be? Well, now, the way that this business works is they receive the cash in advance, and then later they send out the magazines 1 month at a time. So on the day that they receive the cash, they actually owe the customer issues. When the business owes someone something, that's a liability. So the liability we're going to be using is called unearned revenue. Here's the liabilities. So when we receive the $150,000 cash, we have more liabilities. So that is why we're going to be crediting this unearned revenue account. In this case, unearned subscription revenue. And then our comment to record cash for unearned subscription revenue. So on this day, whatever the date is, the company owes $150,000 of magazines to customers. Requirement 2, record the adjusting entry that Southern Magazine makes to record the earning of $9,000 of subscription revenue that was collected in advance. So what's happening now is it is later. We don't know the exact date because for some reason they're not giving it to us. But we sent out some of the issues of the magazine. In fact, $9,000 worth. So we have to have a debit of $9,000 and a credit of $9,000. And let's start with this unearned subscription revenue. Back here, when we originally received it, we had debt of $150,000. In other words, we owed $150,000 of magazines to our customers. Once we sent out $9,000 worth of it, do we still owe them $150,000? No. We have to lower this account by $150,000. And just to remind you, unearned revenue is a liability, and to lower it, we will debit the account. Unearned subscription revenue is going to decrease by $9,000. Now we need to know, well, what's the $9,000 credit going to be? Well, notice it says we've earned the $9,000. That means we've sent out the magazine subscriptions. And when we earn something, we have to record revenue. And of course, revenue increases on the right side. So we're going to be crediting the revenue account because it is going up. And they call it subscription revenue. To record earned revenue that was collected in advance. Now they want us to post to the T accounts. And notice in this case, though, they're going to have us ignore the cash account. So using the 2 T accounts below, post the journal entry and the adjusting entry to the accounts involved and show their balances after the adjustments. So here's the original journal entry, and then here is the adjustment. So let's post this first. We would normally start with cash, but they don't want us to do cash, so we're going to skip that. So we have unearned revenue, $150,000 on the right side. Unearned subscription revenue, $150,000. And then we come down here, and the adjustment, we have unearned subscription revenue decreasing on the debit side. And then we have subscription revenue increasing on the credit side. And then they want us to do our balances. So our balance of subscription revenue is $9,000. And our unearned subscription revenue, remember this is a liability account, so the pluses are on the right side, minuses are on the right. So we're going to take $150,000 minus $9,000 gives us $141,000 of unearned subscription revenue. So as of the end of this period, the company owes $141,000 of magazines to the customers. And that's it.